Good day, ladies and gentlemen, and welcome to our class sponsored by Legacy FX. Today we'll be talking about the easy as 1, 2, 3 trading strategy, or better known as the indecision candle strategy. Now, today's class is brought to us by Legacy FX, one of the world's leading providers of CFD and Forex trading, and they are a licensed and regulated Forex broker. Now, during class, if you want to go to www.legacyfx.com and sign up for a demo account, you can do so. There's no credit card required, no payments of any sort, and you can use their charts and follow along with us as we talk about how to trade with the 1, 2, 3 strategy. Now, Legacy offers 4 dynamic platforms. You can choose from one of them or all of them, or trade at whatever fits your convenience. You can use their web trader, their mobile trader, their Sirix station, or download the MetaTrader 4 platform. And as you can see, the platform is dynamic and easy to use. Everything is easy on the eye. And that's because the Legacy Forex philosophy is simple. Legacy cuts through the excessive jargon and provides financial content in a language that is comprehensive to all. They also offer an incredibly well-respected education center because they believe educated traders are their most successful asset. They offer extensive withdrawal and deposit methods. They have their Legacy FX Pro Rewards program. You get incredible security. And as I mentioned, they're established, well-respected trading academy. Now, since Legacy is a regulated provider, I am required to give you a risk warning. So I'm going to read the first paragraph, and I would appreciate it very much if you could read what's on your screen. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76% of retail investors' accounts lose money when spread betting or trading with Legacy. You should consider whether you understand how spread bets or CFDs work and whether you can afford to take the high risk of losing your money. Now, today's class is being recorded, and if you wish to see a recorded version of this class, you can do so by using the same link you used to come to today's class in about 24 hours, or when investing.com has had time to edit it and clean it up. You'll be able to find it on the investing.com website, where you signed up for the webinar, and look under the education tab and then look for webinars on demand. And in fact, you can go there and see all the classes we've offered over the last 6 or 7 years and watch whatever ones fit your desire at your convenience. So let's get started talking about the easy as 1, 2, 3 trading strategy. Now, in today's class, I'm going to intermix the term security. I might say Facebook, I might say Euro, I might say Bitcoin, but I'm referring to all tradable financial instruments in which an open market exists. Similarly, I intermix the terms investing and trading. We know the difference. And if you're here to learn the 1, 2, 3 strategy, that's for traders. Investors take a much longer term position, but it gets very boring just saying trading, trading, trading. So I mix the terms investing and trading. Now, our 1, 2, 3 strategy is done with candlesticks. Don't run off yet, because too many people don't like candlesticks or they learn pattern recognition. But most of what you learn is completely useless. Because the standard approach to candlestick analysis is pattern recognition, which fails to work in the real trading. Now, you can't skip straight to advanced candlestick analysis without knowing some of the basics first. If you don't know the basics, that's fine, I've got you covered. But when Forex traders start out, they usually learn about candlesticks. Candlesticks are the buzzword of the marketplace. But what they usually learn is useless. They normally see a list of candlestick patterns, and each pattern has a set in stone definition that is the only meaning it can have. So we have things like hammers, inverted hammers, dojis, spinning top, shooting stars, hangmans, and you have to memorize and then recognize the pattern when it comes along. But this is not candlestick analysis. It's pattern recognition. And for a price action trader, it is actually pretty useless. But like I said, I got you covered. So I'm going to share a little presentation with you for a couple seconds on engulfing candles. And then we're going to get on and talk about how we would actually use a particular candle.
Using candlesticks in conjunction with each other can indicate market sentiment by highlighting a shift in power between the buyers and the sellers. Candlestick patterns can therefore provide signals such as a reversal of price action. An engulfing pattern is a strong reversal signal made up of two candlesticks. There are two types of engulfing patterns, a bearish engulfing pattern and a bullish engulfing pattern. There are three main characteristics for spotting these patterns. The market must not be ranging. There has to be an uptrend or downtrend preceding the pattern, even if it is short-term. Secondly, the body of the first candle must be smaller than the body of the second candle. It is not necessary for the second body to engulf the actual wick of the first candlestick, although this does create an even stronger signal when it does. And finally, the second candlestick body must be opposite in color to the first candlestick body. For example, if the first candlestick is bullish, the second candlestick must be bearish.
Well, there we go. That's pattern recognition. Now, could you memorize all that? Could you find it when it's actually happening? And do you think it's always going to do those things and tell you that information? So giving a pattern a set of definitions leads to tunnel vision. When you see that specific pattern, you assume that something will happen. But that's not really how candlesticks work. All candlesticks need to be assessed based on the candlesticks around them and many other factors. Now, normally people say that a spinning top means a reversal is imminent, which can be true. However, the same pattern can also mean that a continuation pattern is imminent, which is the exact opposite. It can mean that price is temporarily stalling. It can mean a whole bunch of different things. Thinking of candles as simple patterns is the wrong way to do things. You need to look beyond pattern and read the story of price. Okay. Now, what is the story of price? Every single candlestick on your chart is telling you a story. When you combine those candles together, you get the story of price. And this is the foundation of this trading strategy, is reading the story of price, not looking for patterns. Reading and understanding the story of price is vital. It is vital because it allows you to answer one of the most important questions in trading. Who is in control? The question has three possible answers: buyers, sellers, or neither. Being able to accurately answer this question is vital. If you're about to enter a short trade, you need to ask yourself, who is in control of price? And if the answer is buyers, well, perhaps selling is not such a great idea. So let's start breaking down the story of price. So if you look at the three highlighted candles, it's easy to conclude that the sellers are in control. And too many people look at these things and see lots of red candles, and they want to sell. Now, the candles all closed lower than they opened. They created new lows beyond the previous candle lows, and they all had small upper wicks in comparison to bodies. The small upper wicks indicate that buyers were unable to push price up by much. Okay, that's a story. That's what those three candlesticks tell us. But what does the highlighted candle in the next chart tell us? Because those three candles don't tell us much of anything. They tell us the beginnings of a story. Now, what happens is when you get a candle of the opposite color after a long move down or a long move up, and it's got a long lower wick and a short upper wick, or reversed if it's coming off of an uptrend, this is called an indecision candle. Okay. But to be honest with you, that doesn't tell us much either. But it makes up our 1, 2, 3 strategy. So indecision candles occur But neither buyers or sellers can gain them or maintain control of price. They are common, but if used the right way, they are very powerful. So let's take a look. Now, they happen all the time. So that's a problem. Something happens all the time. They don't really tell you anything. They give you no clues. But that's only step one of our three-step strategy. Okay. So what we're going to be looking for is after a strong move up or a strong move down, we're going to look for this indecision candle. But now we have to spell out this indecision candle. This indecision candle only comes into play at a support or resistance zone. So what do we have to have on our charts? We have to have our support and resistance lines, or our support and resistance levels. No, too many people define support and resistance as a single price, but that's not really true, especially in Forex when we're dealing with 4 digits to the right. So a support or resistance level or zone is wider than that. Okay. Now you can draw it as a single line, but you have to understand that it's got some body to it, some space. So the only time that we're looking for this indecision candle, okay, this is a candle of the opposite color of the move with a small body, long upper wick, short lower wick, or reversed depending on where it's coming from. But it only can take place in or at the support and resistance zone, because they can appear, and they will appear all the time. They'll appear here and here and randomly here and here. They don't make a difference to us. We're unconcerned. We're only concerned after we use 3 candles for a demonstration, but we're not talking about 3 candles. We're talking about after a strong move up. It could have been 6 candles with 3 big candles and 2 little red candles in between. We're looking for a very strong move up or a strong move down, not a sustain, not a long-term move, not a long-term trend. We're looking for price just shot up over the last 2 hours, and now we get an indecision candle, but only when it's in that support or resistance zone. Here, or in the opposite down here. So let's go over real quickly and take a look at a live chart. Okay, now this is not a chart that I've set up for this. This is my standard teaching chart. It's a Euro US dollar 30-minute chart. The red lines, the blue lines, the gold lines, even the solid red, are my long-term support and resistance levels that have been on my chart forever. Okay. Now, if you don't know how, and as we scroll back, we can see all of these zones moving up and down because as they occur, I've added them on my chart and they just project forward. Okay. And if you don't understand support and resistance or how to draw them, you need to take a class in support and resistance. But here you can see them all on my charts. But the only ones that are important to us are the ones around where price is currently trading. So as we can see, we've had let me get my moving averages off of here so they're not in our way, visually in our way. And so we have our gold line on here. Let's see, the euro is so low, I don't know if I have any. I'm looking for another price below it that I might have historically. So what we're gonna have to do is we're gonna have to go back and find when the euro was trading at this level in the past and find a specific price in the 108 zone, because I don't have anything lower than what it is. And that's a problem when you have a price that's trading at the bottom of its bottom of its zone or its top of its zone. So we see the last time the euro was down here was 109. We have our blue line at 108, but we need something a little bit lower. So we're going back into our historical charts. And let's see if I change it back a little bit farther to a 1-day chart. See, right now we're down at the gold lines. We haven't had the euro much below. See, we had a gap. Here we go. So let's see if we can find some prices here that were strategically important. Yeah, well, I see one. Okay, this level right here. See where this changes from gold, this changes to green. And let's make it a little bit wider. We can see all the tops and the bottoms touching that level here. We can see this was a strategic low. This is about the lowest it went, then down here. And this is only because we're trading with we're in very unknown territory at the moment. So now let's go back to our 30-minute chart, and these should have come through with us. We need a price below 108.36. Damn. 108. Got nothing on my plate here. There we go. Let's try this one. Okay, so right here we have our little green line that we just put on the chart. Let's see if I can make it a little bit darker for us. Okay, so what we've done is we've isolated the support and resistance zones. I'm just going to try to put this on so we can see it a little bit better. Now, as price creeps up or down, I'm just enlarging the chart for you. So here we don't have in either case 2 or 3 candles going up or down. But if we had a large move, let's go back and see what we had. Okay, see now here, I'm only going back in the past because I can't find anything currently. But here we had a large move down, continued down, and we got an indecision candle. But that indecision candle is in the middle of nowhere. Then we get a continuation of that move, but we didn't have a solid move down. Now we do get an indecision candle right on our support, our resistance line actually, but it's not very helpful to us today. Okay, actually here we got something beautiful that just occurred. Okay. we have a strong move down, and we have our indecision candle right here. See the green on this zone? We just had this indecision candle pop up. Okay. Long wick, okay. But that doesn't tell us anything yet. But this is what we would want to see appear on our chart. So step one is first step one is always to have your support and resistance zones on your account. Step two is to start reading price. You're looking for a strong move up or down, and then you're looking for a indecision candle, and either in what you could call a support and resistance zone, or close to a support or resistance line. Okay. And that's step two. We haven't made any trading decisions yet. We haven't done anything yet. We're just looking for a particular thing to happen. So let's go back to my PowerPoint. Oops. So when we get the development of a push up or down, and we get the indecision candle on our support and resistance area. So the indecision candle is forming on top of a resistance area. So in this case, it's a resistance area. In our case, it was a support area. So if you remember, we talked about resistance being a sell area and support being a buy area. So price stalls, and we get indecision forming on that area. This tells us that the sell area is working. When the price pushed into that area, sell orders triggered and the buyers could no longer continue up. So it's the reverse of what we just saw on the US dollar chart. There we saw the sellers selling down, and they couldn't push the price any farther, and the buyers were able to ease it up a little bit with the indecision candle. That's the story of price for that chart. And this story gives us a nice little price action trade setup. Price action allows you to trade many different types of trades: reversals, continuations, range, swing, breakout, and scalps. In my 4-edge strategy, I look for one type of setup. It's easy to spot and trade. It's reversal. So we're looking at the preceding trend, the indecision candle, and then a reversal trend. So the preceding trend is a strong move by the bulls or the bears heading into an area of resistance. So on our Euro US dollar, we had this. It could have been just the opposite and be this. Now, a preceding trend can be formed by as little as one candle, but I don't ever use one candle, because a lot of times you have some crazy market stuff. I say 3 candles. 3 candles giving us a solid move in its particular direction. It can be 4, it can be 5, it can be 6. Now, the preceding trends are simple. This is not trend lines. This is just a move. If you see a strong move heading into an area of support or resistance, you can consider it a preceding trend. Then you're looking for the indecision candle. The reversal setup will have 1 to 3 indecision candles. The indecision candles need to form on or near the area of support or resistance. Sometimes you'll have 2 or 3 candles, all little bodies that appear right after a strong move up. If the indecision candle does not form on or near the area of support or resistance, it is not a valid reversal setup. Now, it's not a valid indecision candle. It's not a valid something else. It's some other strategy. If it's not on the area of support or resistance, whichever happens to be appearing, then it is not a valid setup. So why does it need to be on support or resistance? An indecision candle is a bullish preceding trend, indicates that buyers are possibly losing control. However, indecision candle does not indicate the price will reverse with any degree of certainty. An indecision candle only indicates one thing: indecision. Now, you cannot take a trade based solely on indecision. So we've got a strong move up, and an indecision candle, but the indecision candle must be where? On that support or resistance area. Then we need the reversal trend. The reversal trend is the third and most important part of this reversal setup. This is where we make our profit. After the preceding trend stalls at support and the indecision forms, you often see a reversal trend. The image in the background here shows a bearish reversal trend forming after an indecision on resistance. So you can see the candles going up, the indecision candle, and the reversal. In this case, we saw a transition of power from the bullish preceding trend to the bearish preceding trend. So where do we enter a trade? You know what a reversal trade looks like. You know what you need to enter after an indecision candle and before the reversal trend. Entering trades does not need to be difficult. It's just getting it right. So first we look at the preceding trend, we look at the indecision candle, and then we would look at the reversal trend. You need to enter the reversal trade after part two, the indecision candle closes, that you're sure you have the indecision candle, but before part three completely takes off. Now that's a problem because you could lose your short. Obviously, enter after the reversal trend takes off. It's most of the time too late. You also need to make sure you do not enter too early, as you could be entering a false setup. So, a lot of times you get failed trades happen. You have to realize this. You need to place your stop loss very, very close because you will have bad choices, but you have to follow the steps. And as long as your good trades far exceed your losing trades, you come out ahead. But getting it right time lowers the percentage of failed trades. Many people wait for a candle close to get in, but I've tested this early and waited for closes, get you in too late. So if we had waited, we had the indecision candle, if you waited for the next candle to close, you would have lost all the move. Now, I try to enter on the after the close of the indecision candle, but when the price has reached the top of or the high from the indecision candle. So my rule of thumb is I would enter the trade at this level. Okay. And that way I could take care of all this, but it would have set my stop loss right down here. So if the market failed or it was a false signal, I would get out very quickly. So this means you lose out on a lot of potential profit, which is obviously no good. The key to reversal trading, or trading anything for that matter, is getting it at the right time. So how do I do that? How do you enter the trade? So I've tested countless entry methods over the years, and I've found three awesome strategies. So again, we have to look for that strong move up, the formation of the indecision candle on the support and resistance area. Set your entry point at the low of that indecision candle. Set your stop loss at the high of that indecision candle. This means if it moves in your favor, you would have entered the market here and could have traded all the way down. If it moves against you and keeps going up, you would have gotten out rather quickly with a small loss. So we would set our entry a few pips below the low of the indecision candle and our stop loss a few pips above the highest point of the candle. In reversal downtrend, you do the exact opposite. And where do you set your targets? Remember, we have to be able to set our targets in order to get our risk reward ratios. Targets are also very easy. You need to make sure your target comes before the next major barrier of support or resistance, depending on which way you're going. So if you enter a long reversal from support, make sure your target is before the next resistance level. You should be using a 1-to-3 ratio if you're trading in Forex and CFDs. So you would set You know where you'd have to put your stop loss. You know where your entry point is. So basically, if you count this, you need to have 3 times that before you would hit an area of resistance to set your target. If you can't set your target, then you can't make that trade. So if there's a major barrier like the next support and resistance anyway, my minimum target, I skip the trade. I always start out with my trend line, then my support and resistance levels. Then I look at price action. And finally, I look at volume to confirm. Okay. Even though you've set your entry point, you need to see a jump in volume. If you don't see that jump in volume, don't make the trade. Okay. And this can be your entire trading strategy. In trading, a lot of people tend to overcomplicate simple concepts. Sure, some of the concepts of trading are not the sort of thing that you would intuitively know, but many things are easy. You just have to know what to look for. Too many people have charts that are so complicated and so convoluted, they never find anything, and they don't trade any better than somebody using a simple strategy. So what you're looking for is a strong price move, an indecision candle forming in the next level of support or resistance, and the reversal and the trade. An increase in volume before you actually make your trade, and make sure your stop loss is set close so that you get out automatically if it's a false setup. So that's a pretty easy 1, 2, 3 concept. So thank you for joining us today. If you want to learn more about it, go to www.legacyfx.com and they'll help you learn how to put your support and resistance lines on your chart. Okay. And believe me, eyeballing is the best way. Looking at your charts and looking for strategic prices where the price has stopped at this level or this price in the past. It will make you get more personal and make your trading more personalized when you've got your own support and resistance areas on the chart. If you want to learn more about support and resistance, we have lots of classes. We have our class on just eyeballing. We have our class on understanding support and resistance. Because it's no matter what you're trading, those 2 levels or those 2 price levels or those zones are critically important to every decision you might make. So thank you very much for joining us today. Have a great trading week. Thank you for supporting investing.com and Legacy FX. Bye now.